Well, good afternoon, everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining us today for Open Your Mind and Sharpen Your Market Techniques with Tim Mor. Now, before we actually get over to Tim's presentation, I do want to, first of all, thank the CME Group for sponsoring today's presentation. And what I'm going to do is actually ask Pete Mulmat of the CME Group to actually unmute his phone and give us a quick overview about some of those products we're going to be discussing today. So welcome, Pete. Ball's in your court.
Thanks so much, Cynthia, and thanks to everyone out there and around the globe for joining us today. CME Group is pleased to be co-sponsoring this event with IB and extend a welcome to you for today's presentation. Open your mind and sharpen your market techniques with Tim Mor. CME Group and IB have been working together to bring you professional education webinars on futures for many years, and we encourage you to look in IB's webinar archives for past events from 2013 and 2014, as well as register to attend further monthly events. Just a brief disclaimer from the CME that futures trading is risky. It can involve loss. We'll give you just a second to view that. As a trader and investor, you look for opportunity in the markets and ways to capture that opportunity. Futures are an extremely flexible tool for expressing your market opinion and capturing trading opportunity. The CME Group futures and futures options markets trade electronically almost 24 hours a day, providing traders an opportunity to trade market volatility any time of the day from anywhere in the world. CME Group represents a family of individual exchanges, including the Chicago Board of Trade, CME or Chicago Mercantile Exchange, NYMEX, COMEX, and the Kansas City Board of Trade Exchanges, with contracts covering all major asset classes, including FX, stock indexes, agricultural commodities, energy, metals, and interest rates. CME Group is regulated by the U.S. CFTC, the Commodity Futures Trading Commission. In today's presentation, Tim will be focusing on his proprietary methods for trading the Chicago Board of Trade's U.S. Treasury bond futures. Bond futures are traded electronically from starting 6 in the evening, Eastern Daylight Time, Sunday through 5 in the afternoon, Friday, with a 1-hour break from 4 to 5 in the afternoon. Bonds trade on average 350,000 contracts a day. There's tremendous liquidity. The market is usually several hundred deep, one tick wide. CME and the Chicago Board of Trade also offer interest rate futures and options on futures markets in 10-year notes, 5-year notes, 2-year notes, also 90-day Eurodollar futures and Eurodollar options on futures, as well as a 30-day Fed funds market. So you can express your opinion in any number of vehicles that reach out across the yield curve. The Interactive Broker CME Group Futures Resource Center can be found at www.interactivebrokers.com/CME. You can start your day here with current news, quotes, and charts. It's a great resource for everyone looking to expand their knowledge about futures products. Coming up May 22nd, we're going to have our 5th in a series of School of Futures presentations that we are producing with the Interactive Brokers. It's going to be an introduction to interest rate futures. So we'll spend some time talking about those products I just kind of highlighted in a slide or two ago. Tim Mor has been a professional trader, author, educator, and mentor for more than 35 years. Besides trading his own capital, Tim is president of Blackthorn Capital, a private money management firm that works with several of the largest non-U.S. institutional portfolios. In the 1980s and 90s, he managed and taught other traders for institutions like Commodities Corp, J.P. Morgan, and Goldman Sachs. He remains one of the world's largest currency traders, routinely carrying positions of several billion U.S. dollars. Tim has taught hundreds of professional floor traders from the Board of Trade and CME to become successful off-floor electronic traders. He is a regular lecturer at some of the most prestigious graduate schools of business and finance in the United States, including MIT, Stanford, and the University of Chicago. He currently donates his time teaching basic technical analysis to 4th and 5th grade accelerated students at 59 elementary schools around the United States. The program is named Crayon Drawing. He is a regular featured speaker at the popular Traders Expos held around the world, writes a weekly column for MSN and MoneyShow.com, and gives educational webcasts for most of the exchanges around the world. He is the author of several highly regarded books, Trading with Median Lines and Mapping the Markets, featuring his own trading methods. His website, www.marketgeometry.com, features a great deal of free information regarding his trading methodology and are visited by thousands of traders from around the world on a regular basis. As always, thanks for making time in your schedule for us. Over to you, Tim.
Thanks, Pete. Hi, Cynthia. Always great to see both of you. And all of you that took time out of your busy day to come and see the presentation today. I really appreciate it. Hope I'm on the right page, Cynthia. Let me get my little magic marker going there. Oh, look, I got a red one today. How's everybody doing? I can't see the panel, never mind. I assume you're all doing good. So today, we're going to talk about intimacy, which is probably not something that you think about when you think about trading or the markets. But it's extremely important for you to become intimate with what you're going to trade. This is our firm, our educational arm at Blackthorn Capital, Market Geometry. We have a ton of free information, several hundred articles, all kinds of free videos. Great place to start if you want to look at the different types of methodology that I look at when I trade. Cynthia already did a risk disclaimer. You can read this while I talk. I'm going to highlight mine. Two important things. If you're looking for the Holy Grail, I don't have it. I'm sorry. There isn't one. Secondly, this is one person's experience. Your experience is going to differ. Results are not guaranteed. Individual experiences may vary. Why would they may vary? Because your experience may be different. Something that I use may not work for you. Market conditions may be different when you're trading versus when I'm trading. So be careful. Under leverage when you trade. Slow down when you trade. Don't impulse trade. And of course, use resources like IB. Cynthia does a great job of putting together, not just me, but a lot of great speakers. And you should get a quality education if you want to go out and become a profitable trader. Remember, every day that you trade, you're stepping in to a market where professionals like me, and I trade for the 4 largest sovereign wealth funds in the world. You're stepping into a market where you're going to run into people like me, so you better be at your best. And that's why we're here. We're going to try and give you tools that you can use. So this seminar is actually dedicated to all of you, people that come here to these lectures, trying to improve your skills. And I'm honored you take your time out from your busy schedule to come hear my thoughts. I know you guys are busy. So just so you know, this is the same presentation style that I use when I lecture at MIT and Stanford. Please be patient while the material unfolds. At the university, this might be 3 or 4 hour lectures. Please keep your comments. I know in the chat you guys are going to talk while I'm presenting, and Cynthia has been nice enough to turn it off so I don't see it and it distracts me. But you know, when you make your comments, please keep them to the material here. But for the most part, just let people take in the material, let it flow through. That's the best way for you to learn. Okay? I know most of you are here to learn my methods. Please hold your questions until the presentation's over. I'm known for being willing to answer questions until basically Cynthia's tummy is rumbling and she needs to go have something to eat. So we're going to have a long morning. I'll be glad to answer all your questions. So with that, let's get started. Open your mind and sharpen your market techniques. By the way, that's from Barbara Schmidt-Bailey. Hope you're doing well, Barbara, Misha. And the reason I say that is because this is not 10 years ago, a little more than 11 years ago, I did my first online seminar, and it was with Barbara Schmidt-Bailey from the Chicago Board of Trade. She was head of education at the Chicago Board of Trade, and it was about 30-year T-bonds. So it's a nice little anniversary. And she was also the person that introduced me to Cynthia, and Cynthia and I and Barbara have been working together since early 2005, so it's been a long time. Not trying to date you there, darling. So now if you can become intimate with the instrument that you trade regularly, you will be able to take advantage of moves and rhythms that casual traders will never see. I know that a lot of you like to look at 10 things, 15 things, 20 things. Yeah, you got, and I used to be guilty of this. Okay, I've got a multi-million-dollar trading room in front of me, and let me just tell you what I have in front of me. I have a 37-inch monitor right in front of me, and right to the right of it is another 37-inch monitor. And they're that big because my vision isn't what it used to be, and then I got cataract surgery, so now it's better now. And then to the left, in case this goes down, I've got two 34-inch monitors that I can switch to instantly on a synced backup server. So I use two servers. Now, if you talked to me in 2001 when I developed this technique, I had 12 21-inch CRT monitors on my desk. And I had all kinds of markets going. And what I've learned over time is, and remember, by 2000, I had been trading for a long time, a very, very long time. I met Amos in 1974, so imagine how long I've been trading, 25 years, maybe 26. However, you know, once the information craze started and computers got cheap, the thing was everybody got more computers and more monitors, and they started to watch more things. And unfortunately, we've lost intimacy with the markets. If you used to go down to the Board of Trade, Chicago Mercantile Exchange, the COMEX, any of the major exchanges, the NYMEX, you'd run into guys that were worth 25, 30, 40, $50 million. They made $3, $4, $5 million a year. They did it because they were intimate with one market. Now, I get it, it's not the same when you trade off floor, but you might want to consider, for example, I think Amos Hofstadter was the greatest long-term trader that I've studied in the last 300 years. When Amos was looking at Maine potatoes, which aren't traded any longer, or cocoa, which is traded, or gold, he wasn't looking at other things. He was concentrating on one thing, and he might be concentrating on that one thing for months or years. We were both part of the consortium to corner the gold market with the Hunt brothers. And that started in 1976. Didn't end until the 80s. So went on and on and on and on and on and on. So if you can become intimate with the instrument you trade regularly, you will be able to take advantage of moves and rhythms that casual traders never see. So we're going to look at something specific that I found in 1999 to 2001. I was doing research. I had kind of a hole in my trading times. I'd get up early. I lived in Chicago. Had a huge trading room at home. But most of the time I'd drive downtown, get there early, get a large currency position on that I was likely to hold most of the day, or if not overnight. Then I was a very, very large trader in the NASDAQ and Russells, probably one of the largest traders. But I never traded until about 45 minutes after they opened. I liked the market, the books to balance out, and all that noise to happen. I know a lot of people made money that first half hour, 45 minutes. I wasn't one of them. So I was smart enough to back off and not trade. That's being intimate, knowing what I can do and what I can't do. And so that left about a 2-hour period of I could either go take a nap, didn't want to do that, read a book, didn't want to do that, play with my cats, I did that sometimes. Or I did research, and I could see something in the bonds, but I didn't know what it was I could see. And it took me over 2 years to figure it out and then test it before I was ready to try and test it live. So I spent over 3 years, 1991 to 2001, developing a specific trade for the 30-year bond futures. I only use this on 30-year bond futures, and please, please listen to me. What I'm going to show you today is specific to the 30-year bond futures. You can trade it on 10s. It won't be as effective because the 10s are a smaller tick, and you're going to have to figure out some of the quirks. You're going to have to adjust for the size of the 10s and the size of the swing versus the size of the swings in the bonds. Or you could use it in, for example, German bunds. But it doesn't work for currencies. I know you'll look at it, you'll say, oh, this looks like it. Yes, it does, but it doesn't work. We've had all kinds of people at Market Geometry think that they've taken this and made it into the same trade. It doesn't work. It's not the same trade. It won't work. Okay, there's something quirky about the bonds that makes this work. And it's worked for 13 years now, so I expect it to work for 13 more. It's different than any other trade style I have in any other instrument. Let me say that again. It is different than any trade style I have in any other instrument. I wouldn't use this in any instrument. And the building blocks that I use in every other instrument are different, so I don't even teach this at Market Geometry. Because it's not applicable to the core foundation that we teach when we teach traders to learn to become profitable. It'll just confuse people. But for those of you that want to find a market and want to find something interesting, I knew Pete was doing interest rate futures at the Futures University for the CME. And I thought this might be interesting for some of you. You'll have to practice it. You'll have to spend a lot of time, and I'm not talking about 4 weeks, I'm talking about months, making sure you understand it, sim trade it, get all the quirks. But once you get it down, it's a fascinating trade and a lot of fun to trade. It's meant to be traded early in the morning between 7 and 9 a.m., and I only use it as a day trading method, This is not something you take home. I don't care how much money you have in the contract. This is not something you take home, okay? If you enter a trade and you say this is going to be a day trade only trade, then honor the trade plan and close the trade out, whether it's at a logical profit target or at the end of the day. Don't make it something that it's not. I look for prices to clump, and I'll show you what that means, at an area where price should run out of directional energy, and I'll show you where that means. I use a maximum stop of 8 ticks. I take 1/2 the position off at 8 ticks profit. This is the only time in all of my trading that I ever scale in and scale out. The only time, and it's only in bonds. So let me say it again. This only applies to bonds. Do not try and take this and think you're smarter and move it over, because I was sure I was smarter, and I've taken it to other things. It doesn't work. I've watched other people do the same thing. Save yourself some time and energy. This works for bonds, and it only works for bonds. Then I try and let the rest, after I've taken 1/2 the position off at 8 ticks, which means at that point, and then I go to break even at 8 ticks. Which means the worst that happens at that point, if I can get to that point, is I've made 4 ticks on everything. Then I try and let the rest run to a logical profit target, hopefully higher, boxing in profits as the trade matures. But remember, it's always day trade only. Sometimes I get stopped out. Sometimes I only get the first 8 ticks, which means a 4-tick average on the whole shot. Because when I take the 8 ticks, I go to break even again. Let me say it again. And sometimes I get a nice run to the upside. This is a very high probability trade for me. In the end, it runs out to something like about 80% of the time I take this trade, it is profitable. And it's because of this quirky take half off at 8 ticks and go to break even. Okay, and it only works in bonds. I don't even recommend that you ever scale in and scale out in anything else you trade, because it'll mess your risk reward up, which in everything else I trade, as I was taught by Amos Hofstadter, is the engine that drives profitability. But this is a twist for bonds only that is very interesting, very fun if you can master it. If you can't, okay, you spent a couple hours with me and hopefully you picked up some good money management. If it doesn't work for you after you sim try it, throw it away. So some thoughts on market structure and my tools first. This is called a median line. Some people call it a pitchfork. I spent about 17 years studying with Dr. Andrews. I was a teenager. I used to, my brother had a house about a mile away, a good, nice little bike ride away. I would go down there and ride my bike over to his house and cut his grass. That would give me a ticket to come into the kitchen, get something cool to drink, and he'd throw a chart down and we'd sit and talk about it. And I'd also go on Tuesday nights. My brother went sometimes, I went all the time. On Tuesday nights, got to sit on the floor because I was a kid. I wasn't very quiet. I was pretty precocious, unfortunately, probably. I probably would have learned more if I kept my mouth shut, but spent years and years and years there, and when I became a big institutional trader, I still went back all the time. So I spent a lot of time with Dr. Andrews, and remember, 1929, 18 months, he made $450 million for Joseph Kennedy alone. That's $15 billion in today's money. So that was a methodology that he learned. It's this right here, median lines. So median lines have a mathematical relationship. If you choose 3 alternating pivots and use them to draw a median line, a low, a high, and a low, or a high, a low, and a high, we create a mathematical probable path of price. And as the scale changes, the slope will change accordingly. The probable path will change accordingly. It's very powerful. Median lines are a leading indicator. Really, unless you want to say prior highs or prior lows, one of the few that exists. And it's nice because we can go back and do all kinds of statistical work on median lines, and we have, and there's been 3 doctoral dissertations done on my work alone. We're going to talk about the statistics. People have gone back and done actual doctoral dissertations on this. Because, frankly, people that ran finance departments didn't think it was true. Right. Now, so we know from in-depth statistical analysis that if price is moving higher from the lower parallel, this is the lower parallel, this is the median line or central line, and here's the upper parallel. If price is moving higher from the lower parallel, it will test the median line 80% of the time. We looked at 20 years of data, thousands of different markets and stocks, all the time frames we could think of, put them in a database, churned them all up. It runs from 72% to 87%. What's the median of that? 80%. In my book, my first book, Market Trading with Median Lines, I do 27 really, I think they're really boring, 27 really boring pages. I do nothing but take random S&P charts and then draw every single, even small, alternating sets of pivots, major pivots and alternating sets of pivots on each chart, and count up whether or not it made the median line. And in that particular book, I think it made it 87%. So we've tested this ad infinitum. Okay, ad nauseum, really. And there are a lot of other interesting statistics, but that's a really important one. We know from in-depth statistical analysis that if price is moving lower from the upper parallel, it will test the median line 80% of the time, just as it did on the way up. And this comes from a mathematical probability that Andrews found using a bunch of graduate students in 1924 through 1928 at MIT, locked them in a room, assumed they fed them. They had yellow notepads and pencils. We have the paper, it's pretty funny. Using alternating pivots, you'll generate the probable path of price. Now, here's a quirky little one. We know from in-depth statistical analysis that if price breaks above the median line and trades higher, it will test the upper parallel 80% of the time. Let me read it again. We know from in-depth statistical analysis that if price breaks above the median line and trades higher, it will test the upper parallel 80% of the time. But first, price must accelerate through the median line. What does this mean? This actually is little understood, but extremely important. Once price meets the median line or its next most likely line, so whether it meets the median line or it meets the lower parallel or the upper parallel, statistics tell us that price will accelerate through the median line only 43% of the time, or accelerate through the upper parallel only 43% of the time, or accelerate only 43% through the downside. Price will reverse at the median line 43% of the time, or reverse at the lower parallel 43% of the time, or reverse at the upper parallel 43% of the time. The rest of the time price can you can pretty much ignore that portion. Let me just peek at the next slide, I don't remember it. Yeah, so let me finish the thought. So if you have a position on and you're heading toward the median line, you know it will get there with 80% probability. However, once you get, the closer it gets, and when it gets extremely close or at the median line, now the probability that it's now going to go higher has dropped from 80% to 43%. That's a huge difference. Similarly, if you're driving lower and you get to the lower parallel, it's going to make the lower parallel 80% of the time. But the chances that it's going to blow through and continue lower is only 43%. That's a huge statistical difference, and one we want to keep in mind when we're setting profit targets, setting up trades, all kinds of things. You know, you see people draw median lines on forums or even now on CNBC. When I started my first mailing list, free mailing list, they didn't have websites back then. We did them on CompuServe. We had 4,000 members on CompuServe. And I did it because it was in 1995. Andrew's work had basically disappeared. And I thought that was a shame, because he had spent really the last 20 years of his life trying to make his work popular and help people take their hard-earned living and make some money with it. And when you see this on CNBC or at the local forum, or you see these people that take pot shots, I mean, that's fine. I don't care about that part. But what's sad is, you know, what they do is they just randomly draw median lines, and they treat them like channels. I'll just buy at the bottom and sell at the top. And it's so shallow compared to the truth about median lines. These are such powerful tools if you actually understand them. So let's see if we can use them as we become intimate with Chicago Board of Trade 30-year bond futures. So I'm going to start out by looking at a tick chart, sorry, Cynthia, 1,444 tick U.S. bond futures, okay? And this is a big old nasty chart, meaning one of the things that we preach at Market Geometry is, don't clump your data all in like this. But I know you all do, as in all of you. So, okay, I'll start out there. All clumped in. Let me make sure I get every single possible pivot that my computer screen will allow me to get. Let me get it all. I don't care what Tim says. Tim says, look at this. Let me get it all, because I want to know the low. Okay, fine. I used to trade like that. Also, I want to know the low and the high and the low. How could I trade if I don't know the low? People tell me that all the time. So if we trade that way, and we take a look at this, we see that prices now come down pretty much without, we've got a minor pullback here, but pretty much without a pullback. And we're heading right to this lowest low. And by the way, price goes back up here. And, Pete talked earlier about me teaching 4th and 5th graders at 59 schools, crayon drawing. We teach them to trade mountains, and that's what this is right here. And it came from trading bonds. That's where I thought of it. They traded in stocks, but it's basically, this is the idea. So you can see the price has slowed down just above the prior lows, and it's clumping up, and I'll zoom in here so you can see it, forming multiple tops and multiple bottoms as it begins to change direction. So this is a zoom in of that area right there. And this is the big fat prior low. So you can see we're 2 ticks in the bonds off the prior lows. And we've got triple bottoms. And look at the double bottoms, double bottoms, double tops, double tops, double bottoms, triple bottoms, double tops, double bottoms. Well, that's called clumping, okay? We've got, and on top of that, we basically are only trading at about a 7 or 8 tick range. So all this activity, multiple tops and bottoms, and in a small range. That's clumping. It looks like the vernacular we use at Market Geometry is price has gone horizontal, so the slope was negative, is getting less negative, now has gone horizontal, and somewhere in here may, I say may, because you could be wrong, you get long here and get busted out. It may be now starting to turn positive and head the other way. Okay? All right. So this is a classic bond corner trade. Price runs out of directional energy at a logical area right above the prior lows. Price clumps, all the bottoms and tops, double tops, double bottoms, triple tops, triple bottoms, in a congested area about 7 or 8 ticks. And in this example, price is also breaking above highs on the left and on the right as it's making higher highs. So we've got the shallow turn right above the prior low, prior major low. And now we're starting to take out highs. A classic bond trade for a corner trade. So let's take a look at what I've drawn here. Now, I actually draw my trade plans by hand on paper. And I actually have 10 cases, 10 bank business boxes of trade plans sitting here that have to go to get archived. My wife wants me to throw them away. I just can't do it. I have them all the way back to 1980. Let's take a look. I want to get long. Price has taken out some highs. Okay, this is the same as here. I'm just showing you. Here's my trade plan. I want to get long. If price comes back down and tests this lower parallel right here at 131.29 30 seconds. Okay. I'm going to use an 8-tick stop on that. So my stop's at 21. If I get filled, I'm going to use a conditional order. One cancels the other. And I know IB allows you to use that. I'm going to sell 8 ticks higher, 1/2 of my position at 132.05, 8 ticks higher. Everybody with me? Then I'll go to break even on the balance. So let's say I bought 1,000 bonds. If I bought 1,000 bonds, I'm going to put a stop for 1,000 right here. I'm going to put an order in to sell 500 up here at 05. If that gets filled, I go to break even on the 500. If I get stopped out at break even on the 500, I've made 4 ticks on 1,000 bonds. If I get stopped out on all 1,000, of course, I've lost 8 ticks on 1,000 bonds. Now, the interesting thing is, most of my trades, I won't take a trade without a risk of, in fact, other than the bonds and a corner trade, I won't take a trade unless the risk-reward is 3-to-1. And that's why I researched this trade for so long. I saw something, I kept seeing, and I didn't believe it. There's something quirky about bonds at these corners. They'll almost always give you these 8 ticks. This bounce near the low and a retest or a few ticks higher than the congestion. Almost always give you that, even if they're headed back lower. So you can generally almost always rip this out. And by the way, I would never do 2 corner trades in the same day. If I sell half out here and move to a break even on the other half, then I will try and either box in profits, and we'll talk about what that means, and or have a logical place to take profits. And remember one thing, when you're looking at a logical profit target, it needs to make sense. Remember, we don't want this trade at the end of the day. We want to take our money, get out of the market, and be happy. Come back tomorrow and trade, or move on and trade currencies or whatever. And remember, when we're trading bonds, we're only looking at bonds. We're not going to look at other markets. We're not going to go, hey, what's going on in the euro, or let me check the stock market opening. If you do that, you're not going to be intimate. You're not going to be able to do this kind of trading. You have to have laser-like focus on a market to do this. You'll never see it otherwise. All right, so it's time to execute my bond corner trade. Price comes down, gets me long at 131.29 30 seconds. I never put a limit buy in without putting a sell stop in below it. So I'm working a sell for the same amount at 131.20 30 seconds. If that gets filled, if my limit buy gets filled, I make this contingent that if I get up to 05, I sell half, then go to break even. If this gets filled, this gets canceled. If this gets filled, this gets canceled. Very simple. If I sell half here, I'm going to move to break even. If I get stopped out, I'm stopped out. It's okay. So now I'm long. I note it in my trade plan. I check my order. I check my limit sell order. And I let the market unfold now. Now what I have to do is execute. This is not the time for me to be watching the nitwits on CNBC. It's not the time for me to be looking at the stock market. It's not the time for me to take a look at my IRA stocks. It's not the time for me to look at currencies or make a phone call to one of my friends or text people. No offense to those of you that are chronic texters like my daughter. It's time for you to trade. We want to make money trading and maximize our focus. And by the way, my daughter does trade. So I don't know that she texts while she trades, but she does trade. Anyway, I'm going to show you a little quirky trick that I have here, which is based, I'm not going to go into it too deep because I don't want, we would be here forever and Cynthia would not invite me back. This is based on physics. Some of you know that I have a PhD in physics and math. And one of the things I like to look at is multiple dimensions, because when I went to school at the University of Chicago, it was the very beginning of string theory. So I've done a lot of really fascinating things with multiple dimensions. And at a long talk with Dr. Andrews one day at the kitchen table after cutting the grass, a little bit older, but still not too young to sit down and have some, lemonade and look over a chart. And we were talking about lines and rotation. And he intimated something, or at least tickled something that stuck in my brain. And later on, when computers got powerful enough, I took a look at his work. And I noticed something that I was able to develop using my own methodologies. And we call it a line of maximum excursion. And generally when we chart in two dimensions. We chart price on this axis, time or space on this axis, okay? But some lines have three dimensions because they have a slope. So they have a X, Y, now they have a Z component coming out this way, okay? The line of maximum excursion, if you project it forward, taking off the first high, the pullback, the second high, in this case. There are other ways to draw them on the downside, for example. This line of maximum excursion will show you where price should run out of directional energy, much like the upper parallel or the median line of a median line set will tell you. So here's the first run higher after the corner low. Here's my pullback. This is the first higher low. Here's the second higher low. Then we run higher. Here's the second run higher after the corner low. So I gave it to you in a nice little triangle so it's easier to see. I connect this top to this top. This is a three-dimensional component, not a two-dimensional, because it uses the Z of an X, Y, Z coordinate to give us a slope. We project it out, and it's likely price will run out of directional energy along this line, okay? Now take a look. It's no coincidence that at least when we enter the trade, that line is about at the same place where we take half off. Take a look. So if we got filled and price came up the 8 ticks at that same bar, we'd also be at a logical profit target right here. So we know this line it's pretty smart. It fits what we're trying to do very, very well. So again, I'm long at 131.29. My stop is 131.21. I'm going to sell half at 05. If I'm filled, I'm going to move my stop loss to break even. I'm going to try and trail stop losses, which hopefully will turn into stop profits. That's called boxing in profits. We'll talk about that. And then I'm going to try and get out at a logical profit target, which in this case is probably going to be related to this maximum excursion line to the upside. All right, so let's take a look. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 bars go by. We're along at 131.29. Our stop loss is at 21. Price comes up to 05. We sell half. So we move from our stop at 21. Now we're at break even. So we're long half here. We've taken 8 ticks out on half. And we're working at break even. We can't take a loss in the second half. And believe me, bonds are so deep. First of all, Pete said you can often sell hundreds on the bid or offer. You can often sell 10,000 or buy 10,000, 20,000, 30,000. If you show size, somebody else often steps up and, hey, I'm there with you, buddy. What do you want to do? So you're not going to get any slippage in the bonds. It's one by one. Everybody here is going to be able to do their amount at the price. So you don't have to worry about that. Your stop's going to get filled at your price, unless it's a fast market and there's some unusual news, and then you might experience some very small slippage, but nothing like most other markets. But we still want to be unleveraged, because every once in a while you get a surprise, okay? So trade with the correct leverage. Don't be sassy about it, even though you think you got a high probability trade and there's very little slippage, okay? One mistake can blow your account. So I connect these two highs. It gives me a line of maximum excursion. I've already taken profit on half. I've moved my stop to break even. All right? So trading plan update. Taken 8 ticks profit on half. I'm writing this down on my paper. I've already taken 8 ticks profit on half the position. I take a picture of the screen, put it in the folder. I'm now working a break-even stop loss on the balance, and I'm going to try and box in profits until I find a logical target. Sense. So some more time goes through. Are we good, Cynthia? I'm getting an odd little beep there.
I hear a few disruptions, but we're still able to hear you. So keep going,
okay.
Tim.
No problem. All right. So just buzz me if I fell asleep or something bad happened. All right. So I'm long at 31, 29, 30 seconds, and I'm at break even. Okay. So now let's take a look. Price leaves double bottoms. We've taken half off. And price is approaching the line of maximum excursion, okay? And price leaves a high and pulls back, leaving multiple bottoms right here. Price is boxed in, this high, this low. And I try and use these boxes to help me manage my risk and lock in my profits. Now, when price does break above the top of this structure box right here, it's time to try and reduce my risk. So what I want to do is I would raise my break-even stop order, but I place my stop orders 3 to 5 ticks below structure. So the new stop order would be the same or lower than the current break-even. This is normally what I would use, but if I go 5 ticks below it, it's not going to work because it's going to be below break-even. So it can't go any better than break-even, but this is the idea of a box. I've got a low, I've got a high. I either break out of the low or break out of the high. when I break out to the upside, I would be 5 ticks below here, but as I said, break even is better, so I leave my order there. I'm going to work a limit sell order at the maximum line of excursion. I see how price is hugging this line of maximum excursion. And I'll take profits there, or I'll exit if my stop loss or stop profit is executed, or at the end of the day. Those are all the options. Sounds like a lot to juggle. That's why you shouldn't be watching TV. You shouldn't be paying attention to other markets. You shouldn't be playing video games. You should just pay attention to the market. Bond market moves pretty fast, especially on tick charts. All right, trading plan update. Here we go. I took 8 tick profit on half the position at 132.05 and closed out the balance. The balance of the balance. How about that? Of the position at the maximum line of excursion. So I had a profit order at this maximum line of excursion at 132.09. I made 8 ticks on half. Then I made 12 ticks when I got filled up here. I made 12 ticks on the balance for an average of 10 ticks per contract, which is $312.50 per contract in roughly 2 hours of trading. High probability, nice profit, no fuss, no muss, never took any heat on the position. This is a normal corner trade. If you can do these and do these and do these and do these 10 times a month, and every once in a while you'll get a runner that'll go one handle, 2 handles, each handle's worth $1,000 in the bond, about twice a month. You can make lots and lots of money. All right, trade cap. Why not use the median line above for a profit target? Let's take a look. Always do a post-mortem on a trade. Say, did I do things right, or was there something else I could do? So price met the target at the maximum line of excursion right here at 09. You can see we went up another 3 or 4 ticks, and then we started to trade off. We took 1/2 off at 132.05, moved to break even, then we took the rest off at the line of max excursion, went up about 4 more ticks and started to trade off. So why shouldn't we still try and box in profits and try and use that median line, because it was pretty far up there. Be nice if we got all that money. So here it is. Here's that median line right here. Corner bond trades were designed to be entered between 7 and 9:30 and closed the same day. And by the same day, I still use the pit hours. So it's 7 to 2. At 2 o'clock in the afternoon Chicago time, trades are over. It's not the 4 o'clock smoke break. I don't know what Pete will tell us someday what they do for that period where they're closed. It's not when you decide to walk out of the trading. It's 2 o'clock in the afternoon, period. Okay? Closed at that time or before. In that context, a profit target up at this far median line, all the way up here, would be past the prior highs. Here's our prior highs from 2 days earlier. And it'd be more than 1.5 handles above the entry. Are there days where you get 1.5 handles? Yes. But here's the clue. If you're going to get those kind of runs in the bonds, basically by about 9:30, it needs to show some significant acceleration. And you can see this was one of those gentle days. And there's nothing wrong with taking $312.50 per contract. But you need to understand and be honest with yourself about what kind of day it is you have in front of you. And this is not a day that looks to me like it's going to make a run at this upper parallel, or even much more on the upside. Not within my same day parameter. And I guess we didn't show a shot. Basically, price stopped here, came all the way back down to the median line, actually came a little below the median line, kind of putted around the rest of the day. Now, if you held this long term, but that's not what this trade is about, it did eventually go up to this upper parallel 3 or 4 days later. But that's not what this trade is about. It's not what we're trying to do. All right, so now let's look at something a little faster. 770 tick U.S. bond futures. I started this out for those that you say, and Cynthia will like this, for those of you say, oh, you know, I don't have good tick data. Okay, it's fine. All of this work was done on 15-minute bond futures. And it still works on 15-minute bond futures. I did some research and showed my advanced group. I teach an advanced group of market geometry called Breakfast with the Masters, which is where we try and present myself and Alan Andrews and Amos Hostetter's work. I showed some current research I'm doing. One of the things I looked at was doing corner trades with daily bars. So it works with all kinds of time frames. Doesn't work with currencies. Sorry, doesn't work with stocks. Does not. But it does seem, at least on first blush, we're not done with the research, so don't go out there and try and trade dailies. But at first blush, it seems to be similar, just much slower. Well, here we're going faster. When I started out, 15 minutes back in 2001 was worth 352 bond ticks. A gentleman by the name of Raymond told me to check that out. And ticks were just becoming available on a regular basis from the exchanges right around 2000. Prior to that, you could collect your own, but it was good luck. Sometimes you had, because your internet connections were so junky, sometimes you had good latency, which meant you had good ticks. Other days, you only got 20% of the ticks. Now, you know, if I check my ticks against my partner's ticks or against my synced server right next door that's running the same server feed, I'm plus or minus a couple ticks in a day at the most. So let's look at 770 tick U.S. bond futures, which are a little faster. 352 these days, there's too much activity. They're just clunky looking. You could trade them, but they're not pleasing to my eye, so I don't trade them anymore. They don't flow well. All right, so hopefully you will have gotten an eye from the first trade that you can understand exactly what it is we're drawing. So let's take a look. Here's the lowest low. Here's my first pull up, my pullback, my second move up. I could have drawn in a, do I dare? Oh, why not? I'll draw in the triangle like I did the other one. There you go. Now, I connect this high and this high, and that gives me the line of maximum excursion. I project out the maximum excursion. I'm pleased to see that it actually projects out, and then when price comes, makes a small move back lower. So I've got a box going right here. These highs, makes a low, takes out, you can see a gap, try to move lower, fail to move any lower, take out this high, so that's a box being broken. This is a type of structure. When the structure plays out, it falls out or runs out of directional energy right at the maximum excursion line. So that tells me my maximum excursion line is doing its thing, doing exactly what it's supposed to do. It tells me where price is going to run out to the downside, to the upside, sorry. Now, I tried a similar thing on the downside. It doesn't mean that everything, let me erase this and this. I'm getting pretty good with that, Cynthia. All right, that doesn't mean that every maximum excursion line works. For example, let's connect this low. Here's our run up. Here's our first pullback, and project it forward. And you can see pretty meaningless. Now, another thing you can do is you can take this maximum excursion line, treat it like as a part of an action-reaction set, and just take the frequency and reflect it and move it down to the prior low, all the way down here. How'd that work for us? Not bad here. It caught this low, so okay, that's interesting. But take a look as we move it forward. As we move it forward, not so good. So, that's okay. We have tools. We'll watch the market. One piece of our logic worked. These other pieces so far have not given us any clues. So now we look at our boxes. We've got this box built in. We leave a major high. We turn lower. We're looking for a low. It's not here. It's not here. It's not here. It's not here. Okay, make a low. Start to take out highs to the left. Leave multiple tops up here. So this is the first major pullback. Come down and test the bottom of our box. It holds. Head back higher. Can't make it to the top of the box. And now price breaks through the box. Again, these are types of structure. So this is actually a mountain that my fifth graders would look at. And you can see that the base of the mountain doesn't hold at all. So let's follow it forward. Take a moment and orient yourself. I'm going to grab another drink of tea. All right, so price heads lower. This is the box. This is my first pullback high. I've got a low here. We break through the bottom of the box and head lower. Price comes down, and you can see all the gorgeous clumping, and we're right below this low, right above this low, as well as the lowest low right here. And if I zoomed in on it, but I really don't have to, you can just absolutely see this. Double tops, quadruple bottoms, I don't know, 4 or 5 bottoms, double tops, 4 or 5 bottoms. It's clumping all over the place, and a double test then on this lowest low. Is this a potential entry area? It definitely would be. But you have to trade with, if you're going to trade these types of trades, where you're absolutely intimate with the market and find things that work if they're executed flawlessly, you have to stick to the rules. No matter how you feel about the trade, you have to stick to the rules. So in this case, take a look at what time it is, where my red ball is. This trade is designed to be made between about 7:30, 9:30, maybe close to 10. It's 11:02. It's just too late in the day. Do they work sometimes? Yes. Do they work like they do between 7:30 and 9:30? No, not at all. This entering later in the day really drops the winning percentage. And because your risk reward on this trade is so low, you must have that higher winning percentage. Or long term, you're going to just, at best, be spinning your wheels. And we're not interested in that. So you have to have the discipline to actually pass on a trade like this that looks absolutely picture perfect. And then, of course, you can't feel bad when it then goes ahead and blasts off to the upside. You can't say, oh, crap, I should have made this. What was I thinking? Next time I'm going to just cheat and take. Because once you start to cheat, you're cheating yourself. Once you start to break the rules, you're not going to be able to know when to stop breaking the rules. So it's a beautiful rally that tests the prior first pullback high right here. Notice that we're right at this high. This is a gorgeous trade that just came too late in my trading day to catch and hold my interest. I would love to have taken this trade. I watched it. Too late in the day. Moved on. Came back in my postmortem. Took a picture of it. Came back in my postmortem and said, oh, you know, it worked out. But it's too late in the day. So draw with a purpose and trade with a purpose. Now, I can hear the questions, why didn't you get long for this rally? Why aren't you selling here? Where are we? Take a look. Let's orient ourselves. Why aren't you selling here in case there's upside failure and price heads lower now? Questions, questions, questions. According to my rules, this rally begins too late for me to be interested in, and if it falls here, it's far too late in the day for me to look for an entry here. Sorry if it fails here. I do not trade impulsively, ever. I know exactly what I'm looking for. I look for it. When the opportunity appears, I execute as best I can. If I can't execute the trade, that's okay, there'll be another. If I do get in, then my job is to execute the trade flawlessly. So now let's take a look and orient ourselves again. This is the real question. Is this the beginning of a major rally, or is this just a pendulum pullback in the downtrend? So let's look. We already talked about lines of maximum excursion. We grab this high, and here's our first pullback from the low. So we're going to grab this high and mark the line of maximum excursion. Is it useful? Don't know yet. Now I can draw another line of maximum excursion. I can take this high, and this is the first pullback off of here before we turned higher. I can certainly draw this line of maximum excursion, which also comes through this high. I know it's been breached, but sometimes they act as center lines. Is this useful? I don't know. There's two things this could be useful for. It could be used as a center line in an action-reaction line set, like, I'm going to push my luck. I'm going to try and draw twice. That, imagine that being flat and parallel. Well, my flat don't work too good. That's an action-reaction set somewhere in the world. He's just drawing better than me. So, get my cursor back. This high, this major high, it's nice that it was tested here. I know it broke through here, but maybe this is like a median line or a center line of action reactions. So let's get some more data and see if we can figure out if either of these lines are meaningful and if there are trades to make. So take a look at the big picture and see if you can see how all the market structure relates and how a simple adjustment might change this chart significantly. I want you to spend literally a minute here. I'm going to be quiet for a minute, and I want you to look at all the parts and see if you can see how they actually fit together, and if just a small change was made, how it might significantly impact this chart and maybe give you a major clue. while you're watching, I want to point out that this line of maximum excursion, this high connected to this high, gave me this high. I know it's come through, but if I take this high and this low and this high, these are just the big pivots, this high, this low, and this high, and draw a median line, this line that I used as a maximum excursion line also turns out to be the median line in a median line set. But how am I going to deal with this line of maximum excursion up here? This is the line of maximum excursion, but what else is it? I grab this high and connect it to this high, project it out. What the heck else is it? How can I resolve the two? If I turn, there you go, draw without an opinion. Ask the market open-ended questions, not ones that support an opinion. You can think about what that means. If I take this median line that was connected up here, the A point was here, and drop the A point, it's called a modified Schiff. Jeremy Schiff thought of it at one of the Tuesday evening sessions at Dr. Andrews' house, and then everybody did about 2 months of research, came back, and then we changed the proposal. He immediately wanted it to just be a 50%. You measure from the A down to the B. He wanted to drop it 50%. After doing all the research, what worked out better was down 50% and over 50% between the A and the C. So down 50%, over 50%. So this is a modified Schiff, and you can see how it changes the slope. I'll go back, and now I'll change the slope. And this modified Schiff matches, the upper parallel matches this line of maximum excursion perfectly. So here's our new center line. It's actually parallel to the line of maximum excursion. Here's our lower parallel. Here's our major low. Prices made a run up, and it's at the test of this first major pullback. It's right there. And so now the question is, what happens from here, and is there a trade opportunity? Okay. Now, the pendulum pullback right here ended right at the first major pullback, and the line of maximum excursion has held price rallies perfectly. The regional low at 134.06 spawned a huge spike rally for a bar. So this was a low, we came back and tested it, and then we got a huge rally on a 1 bar spike. So now as we look at it, but notice the close, by the way. The low holds, late in the trading day, price spikes higher, quite a bit higher, before closing in the lower third of the bar. Where is this market headed? Put the clues together in the order as you observe price action and market structure. Take a look and see if you can put together in your mind how this makes sense and how we might take advantage of it if you think it's an opportunity. But remember, it's now after 3:45 in the afternoon. The pits have been closed for an hour and change. I know there's going to be electronic trading all night long, but we're not going to be involved. We're not going to trade until 7 o'clock and up until about 10 o'clock. So let's see what we get. When is it too late to trade? So here's our line of maximum excursion. And you can see price come down, test it, come down, try and test it and fail and close in the lower third. And now head lower, test and test the lower parallel, start to move up, break through the lower parallel, but now we close back inside of it. And look at the quality of the bars at the low. Get double bottoms, triple tops. This is the lowest low right here. So we are one tick above the lowest low. Price should run out of energy not only just above this lower low, but also we're now 4 bars inside of this blue median line that it's holding. So this lower parallel should now hold price and tell us that it should not. It only has a 43% chance of breaking through this lower parallel. It's headed to the upside. It's got an 80% chance of making it to this median line. That's the difference once we start to move. On top of that, we are above this down-sloping lower parallel, and since we've been through it and left a higher low and now closed above it, when we close above this lower parallel, it's a sign of strength. Now, 3 important things come together here. The prior lowest low, the red lower parallel, both which tell us price should run out of directional energy in this area, and clumping. I mark in MLC, which is the blue, after the 4th bar closes. 1, 2, 3, 4 bar closes up here. On its high, when it closes on its high, that's when I mark it all in. And immediately I realize, oh my God, it's right in front of me. Price is clumping. But I'm not long. I was too late. I noticed the area and the clumping too late. I'm sure that's happened to all of you before. Afterwards, whether it's 30 seconds, 5 minutes, the day later, you see what you were looking for. But when is it too late to trade? It's only 8:39. I'm not going to give up. That would have been a gorgeous place to enter, but I'm not going to give up. That's okay. So, here we go. Now I'm going to add, there's a lot in here, so for those of you that are sticking around for the whole presentation, or if you're viewing it later on, there are a lot of things buried in here. You're going to have to go back and look at them one by one and practice them and see if they make sense to you. And one of our members, Carlos, also does all of our DVD stuff. It's one of the first days at our market map sessions, our midday sessions. Carlos is kind of out of the mouth of babes. We were talking about size of stops, and we said, you know, we're only going to use a 5-tick stop, but we have 8 ticks available. And he said, doesn't that mean that we could trade three ticks inside the line and we could just trade within our stop? And so we've used that concept quite effectively. So watch. My price, I'm trying to decide when is it too late to trade. And here's a visual aid that will help you. I don't care what methodology you trade. If you know your stop size, make a bar that you can move around that's the size of your stop and call it a go, no go bar. And this is an 8-tick go, no go bar, okay? And my stop needs to be 3 ticks below the major low. So this dotted blue line is the major low. I take my go, no go bar and I bury it so that the bottom is 3 ticks below this major low, okay? That leaves on top a good portion of the go, no go bar, and it tells me that I can trade anywhere between the C pivot right here and the top of my go, no go bar. That's what's available at this moment. Actually, it's just 2 bars later. So I've got, in 2 bars, this will still be available. I've marked out what is available so that I can understand where I can trade. So can I trade at the red parallel? Yes. Can I trade at the blue parallel? Yes. I can trade lower if I want. I can trade higher if I want. I could go into the market at the market if I want. I have to keep in mind 8 ticks, but this visual green bar that's going to go has done it for me. So if I enter anywhere inside of this green bar and put my stop just under the green bar, I'm taken care of. It's a wonderful visual aid. Now this is the one piece that you can use on the even the S&Ps, you can use it on a stock, you can use it on anything. As long as you know your size, your stop size, make a bar, make it movable. It's a go, no go bar, move it around your chart. As you get close to starting to eye up a trade, move your go, no go bar, buy the trade. It'll give you a great feel for exactly what you have available, where you can get in, where you can't get in. So I add a sliding parallel. Now that I know what's available, I add a sliding parallel, which is a bar that has, a line that has the same slope as the lower parallel. And I add it to the close of the bar right over here, right before price lifts higher. Take a look. You can see we had 2 closes in a row, and then price lifted higher. So I put it right on that close. And I'm using the same slope as the median line. And I will buy against this sliding parallel and use the stop loss of 132.21. So remember, it's not too late to trade until I cannot afford the stop loss under structure at the major low. Let's take a look. Okay, price comes down right here. We connected our sliding parallel. Price gets us long at 133.28. We have our stop loss marked. We could have just flipped it over to tell us where we're willing to sell half. We're willing to sell half, and we do sell half of the position at 134.04, and then we move the stop to break even. This in itself is a bit of a box. It has multiple bottoms, multiple tops. We break out above it. And remember, I'm going to use a 5-point profit go-no-go stop. So I put my 5-point profit here underneath these lows that we've broken out above. As soon as we break out above, I put in this 5-tick go-no-go. But unfortunately, again, I'm better off being at break-even. So I stay at break-even. Now we trade up, come down, leave clumping lows, come up and leave 4 or 5 tops, as well as these tops. So I've got another box, okay? And you can see price is all boxed in. We come back and test the bottom again. As price comes up, I can put my go, no-go bar here so I'm ready when it's time to place stops. Remember, I got long. I took half off at 04. I went to break even on the balance, so I'm working these orders on 1/2 the original entry size. When price breaks above the top of this box, I now move my profit stop up from break even to 134.00. Is it a huge difference? No, it's 4 ticks, but 4 ticks is lots of money. This is a day trade. Take a look at what time it is. It's time for me to get out of this, is what time it is. So where am I going to take my profit? I've got a snugged up profit stop, and right in front of me is the line of maximum excursion. I'll take my profit at 134.15 if it hits the line of maximum excursion. And then pretty soon I'm going to go market on close and just exit the trade. We got out right here. So let's go back and look. So we took 8 ticks. On half. We're missing a slide or two here. We took 8 ticks on half. Then we took 4 plus 15 is 18. We took 19 ticks. At our exit here, so 19 plus 18, 27, about 13 ticks total. And somebody can do the math for me and just tick it up there on this trade. This is the next day at just after 8:15. Here's our 8-point go, no-go bar. This is our clumping area. You can see it. We're at our lower parallel. Here's where we took our profit. Price comes down to the lower parallel. Here's our maximum lows. Energy point, confluence of the upsloping lower parallel, the downsloping red median line, and this is where energy should run, price should run out of energy, right on these lines and within 5 points of this energy point. So this is clumping at an area where price should stop. I can trade anywhere within here and still afford my stop loss order. I take my go, no-go bar, I put it 3 ticks underneath the lows. I can trade anywhere in here and still honor my 8-tick go, no-go. As I look at these 3 bars, as far as I'm concerned, price is either going to run out of energy right now or it's going to make new lows and stop me out. I'm not going to use the whole 8 ticks. I'm only going to use, looks like 6 out of the 8. I'm willing to buy where this bar closed if it will fill me. Put my stop loss on the whole thing 6 ticks lower. If I get filled, I'll sell after 8 ticks of profit, 1/2, go to break even. Let's take a look, and we're over here. Okay, we get filled. We're long at the close of the last clumping bar right in here at 134.01. The stop loss must be 3 ticks below the clumping bars at 133.27, and you can see we didn't use the full 8 ticks on this one. Price comes up. We take profit on half at 134.09 and move to break even. So we've got 8 ticks already in hand, and we're at break even. We make a box. Here's our low. These multiple tops and bottoms, it's a multi-pivot line. become the top of my box. So I can move my 5-tick go-no-go profit bar underneath. So my profit stop is 134.04, 5 below 09. I've already taken half off at 8 ticks. I'm at break even. Now I can move up to 04. Is a 3-tick difference. It's $100 a contract difference. I've got price boxed in. I have the same bottom here, which was this multi-pivot line that I used as a high before. Now I come down, leave a low. Don't take out the prior low, but leave a low. Retest the high, and finally take out the high. So again, I can move my go-no-go bar up again underneath this multi-pivot line. Now my profit stop is at 09. So remember, as we watch this and we're thinking about potential profit targets, we know this. Price should reach the median line 80% of the time. That's our probability of reaching the median line. However, once it reaches the median line, it only accelerates higher 43% of the time. So my odds drop from 80% of moving higher to only 43%. That's quite a drop. And I've got a nice bit of money, nice bit of chunk of change here. I'm willing to take my money at the median line, walk away, come back, trade tomorrow. Price should reach the median line 80% of the time, but once price reaches the median line, it only accelerates higher 43% of the time. I'm willing to take my profit at the median line, and I do. So I get filled at 25. I was long at 01, so that's 24 ticks, plus 8 ticks is 32, so that's an average of 16 ticks. I entered a long position at 01 with an initial stop loss at 27. I took profits on half the position at 09 and moved to break even on the other half. I moved my profit stop to 134.04 and then 134.14 before taking profits on the second half at 134.25. I made 8 ticks on the first half and 24 ticks on the second half for an average of 16 ticks per contract, which is $500 per contract. This trade took about 2.5 hours to unfold, so it's not bad work for good money for 2.5 hours. How often do I get these trades? If you watch the bond market religiously between 7:30 and 9:30, probably get 10 to 15 trades a month. And again, extremely high probability for me. But you have to become intimate with this market and practice and have ironclad discipline. You can't trade it too late. You can't try and hold it overnight. You can't break the rules. The rules all mean something. Any one part will scuttle the entire trade if you try and cheat. All right. Hey, we have a brand new website. Holly and our web designers spent 6 or 7 months, entirely new website, all kinds of new resources, all the IB, links to all the IB webinars, plus some CME and CBOT webinars to go all the way back to 2003, all kinds of free articles, all kinds of free information, all kinds of my original trade sheet, my risk analysis that I use when I mentor traders, all kinds of free stuff. Take a few minutes and go check it out. I'm here to answer your questions. Cynthia is, wait, I'm going to front run you. Cynthia's about to tell you, see, I can see into the future. Cynthia's about to tell you that there is about to be a poll, and she's going to ask you to rate this and do some other things. But one of the cool things is right in the middle of that poll, there's a little blank area that you get to write something. Do us all a favor. Don't write my name. I don't care. Write Cynthia's name or more webinars, something like that in there. That'll give Cynthia more funding and more happy love, juju, good things for Mr. Peter Fly, who owns Interactive Brokers. He already loves her. He already treats her well. But you can never have too many resources. And Cynthia really does a great job of helping educate traders. So when she does this poll in a second, do us all a favor and write webinars or more Cynthia, something like that. Okay, Cynthia, you're on.
Well, there you go. I've gone ahead now and opened up the chat panel, the polling panel, and there are 3 short questions. So I ask everyone, please make your selections there. And number 2 is that input box that Tim had mentioned. But don't put your questions there. We won't see those questions until I review this poll with management. So hold on to your questions because I am going to activate as well. By the way, everyone, click the submit button as soon as you finish that, because then you can close down that polling panel. And what I'm going to do is activate now the ability to send questions directly to Tim. So once you finish with the polling panel, you can simply use the X in the corner of the title bar, and the poll did end. And you can close that out. Now, if the polling panel has collapsed your chat panel, find that title bar and simply double-click, and you'll be able to send questions to all of us. Now, notice there is a send to box there that currently says the host, but you will be able to simply click within that box and choose all participants. So, everyone, we're going to thank you for your participation with that poll, and let's get back in. And are you seeing any questions now, Tim?
No.
Not yet. Okay. All right. Well, I'm going to, let's see.
Maybe it was a perfect presentation, and everybody said, oh, that's perfect. Thank you.
Well,
there we go.
Oh, here they come. I knew they'd be coming.
I was starting to sweat.
Well, go ahead with them, and I've got a few that I'm going to be adding in as well. So you can start handling them, Tim. Thanks.
Okay, thanks. Hi, Eric. How are you? I'm sorry if I missed this. What periodicity is this chart? 20 minutes? Okay, we started out with a 1,444 tick chart. Then we went to a 777 tick chart. But the original research was done on 15-minute bars in the bonds. And you can certainly use 15-minute bars today. No problem at all. So it works with time charts. It works with tick-based. I like ticks. It tends to smooth things out a little bit, especially in the night session. That way I can leave the night session on my screen. If you're going to use time-based bars, you might want to experiment at least with just showing the day-only session. But I'd start out with 15 or 20-minute bars. Fine. Scott, how are you? On the second trade, the one you passed on due to being late in the day, could you go over how the trend lines were drawn? Sure. Okay. I'm going to start with this one more time, and I'll try not to make the pencil look bad. You can see we leave a low, we come up and make a high, pull back, make a new high. This is our line of maximum excursion. We connect this high to this high, projected forward. We looked at 2 other lines of maximum excursion. This is this one reflected, and this is a maximum excursion from this low to this low. Neither one of them turned out to be effective. Then, as we traded lower and left multiple lows, we had another maximum excursion, this high through the first pullback, expressed out. And what we're looking at is the first major pullback and the lowest low. We have definite clumping here. It's a potential trade area. It's really a horizontal line, but it's because it's right below this first major pullback and the lowest low, but it's too late in the day to even bother to look at it. Hi, John. Does IB provide the good tick data needed to do the trade? Nope. And Cynthia won't be mad at me for being honest, but you could use 15-minute bars, John.
And Tim?
Yes.
If I could jump in, we
Of course.
did just add a new feature to the Trader Workstation platform that does
Get out of here,
include
really?
tick charts. Yes, it is. It's something. It's not. It's actually included in, but it's an outside provider called Multi-Charts.
Nice.
You can access the multi-charts, which do include tick data, and also give you the ability for back testing.
I know multi-charts.
Okay, well there is
I have multi-charts.
Excellent. All right.
Okay, you know what? If you want, I'll do. If you guys are using multi-charts, I'll do one using multi-charts.
Oh,
there you go.
Excellent. Okay, I'll hold you to that for next month.
Absolutely. Okay.
But for everyone who is interested, you're able to get to the multi-charts from either the new window button if you use the Mosaic interface, or the analytical tools if you're in the advanced order management section, our spreadsheet section. So look for the tick charts. There is a free version if you go to multicharts.net, and there are some paid subscriptions if you do want to trade from the chart. But do want you to know that there's a free version available for you as well. So try those out, everyone.
Very nice. You know what? I will double check his median line tools. Last time I looked, they were fine. And if not, I'll make some quick suggestions and we'll clean them up. But I didn't know that, but I'll be glad to do work with multi-charts. It's fine.
Oh, excellent. And we also have the Andrews pitchforks in there, so I was happy to see that as well. So
great.
There's a lot that's available now based on all of the requests that we've heard from clients. So do check that out, everyone.
See, you know, you miss a month, you miss everything, right? All right. Vance, is there any place we can read about the approach you use for go-no-go bars? It's not in any book yet. I'm in the midst of finishing a new book, and it will definitely be featured in that as well as some other just simple visual tools. It's really just the size of your stop. Let's say you're trading E-mini S&Ps, Vance, and you use 3 handles, which is 12 ticks. Okay, so that's $150. So you visually just take a bar that's $150 long or 12 ticks long and make it a nice fat bar in a color that's going to stick out, and then make it, and I know you can do this on multi-charts, you can certainly do it on Ensign, I'm sure you can do it on IB, just general IB as well. And then you can drag it around the chart. So let's say you're considering an entry here, but you want your stop to be underneath this low. You can just tack it on right here and say, oh, crap, I can't get under this low. Or, that's perfect, I've got room underneath this low. So okay, I can get long here and my stop fits my profile. Okay, it's just, we have a bunch of visual things that we help. And it's really nice because let's say, I don't know about you, but again, I live in Arizona now up in the mountains, so I do trade at home. I'm actually inside the mountain. You've got about 30 yards down the hallway from the rest of the house. But every once in a while, my wife or one of the kids does pop in, or I have to walk outside of the trading room, or let's say you get a phone call and you decide to answer the phone. If you look back at the chart, it really helps you refocus on what's going on. And anything that you can do to keep your focus at 100% will really improve your trading. So let's see. You guys are moving fast now. Okay, are the same rules? Yeah, it's just up or down, it's all exactly the same, Bob. How are you, Bob? Yeah, short, long, doesn't matter. These just happen to all be long, but doesn't matter. The charts are actually based on, you can look at the dates. I try and make the charts as close, and remember, these charts have to be into compliance a week in advance. So this is about as close to as I can finish the charts and have them into compliance. I always like to have charts that show current trades, okay? And these are always real trades. And you see me pass on trades, so you know that I'm not just, okay. Does the time of day on when to enter into the trade also apply to stocks as well? Steve, I said it again, this is only for trading bonds. You cannot trade stocks with it. If you try and trade stocks with this, you will blow your foot off. Please do not do that. That doesn't mean that you can't do some interesting things like use the go-no-go with stocks. And by the way, we teach stocks at Market Geometry. the go-no-go. You can use the go-no-go. You can use boxing in profits like this, which help you with market structure. You can use these maximum excursion lines. They're deadly on stocks. We got long Facebook at 19 and change and ran it out to just above 70, all based on maximum excursion lines. So you can take all these things and use it with stocks, but corner trades, they don't work. Sorry, it doesn't work with stocks. I assume the IB recorder, I assume, is Cynthia. From Randy, when analyzing stocks or ETFs, what time frame should we be using for graphs? Okay, you can't use corner trades, but if I was analyzing stocks or ETFs, I like either, and I like some odd stuff, but if I wanted to keep it simple, I'd be doing something really simple like 15 minutes. I really like day only, which is 390 minutes because stocks actually close at 3 o'clock, not 3:15. And then I divide them equally, and that's 13 minutes. So sometimes I use day only and 13-minute charts. I'm fond of those, but there's nothing wrong with 15 minutes. I think it's just personal preference. Okay? Eric, how are you? For day trades, is 1 minute too fast on stocks? Yes. Or 20 minutes better, especially when using short-term option spreads? Well, I know a whole lot about a whole lot of things, and here's one thing I know about option spreads, Eric. I used to actually run the largest options firm in the world, Chicago Research and Trading. They answered to me. And the one thing that I did learn while they answered to me was that I'm really good at directional trades, meaning outright trades. And I was best leaving options trades to options traders. So Eric, if you trade options at all, you're probably a better options trader than me. I don't trade options at all. That doesn't mean I haven't mentored people. The largest stock house in the United States, not a broker, that would be IB. The president of that firm has been in a 2-year mentoring plan with me. I do also mentor professionals, and he has quite a sizable account, but he's never been profitable like now. And he just trades options. What he uses median lines and my methods for, like maximum excursion, is like, for example, at this area or this area, he'll put on options or option spreads, okay? But you'll have to decide what option strategy is best. I can show you the area, but you'll have to bring your own options knowledge with you. All right, if you project vertically from the corner or trade entry point of an ML set to the ML, does price reaching that point qualify as an ML touch? If you project vertically from the corner, let me get to a median line. How about a better median line? Guess we didn't have many median lines today. All right, if you project vertically from the corner, there we go, or trade entry point of a median line set to the median line, right there, does price reaching that point qualify it as a median line touch? Yes, of course, sure. And is that true for most instruments? Yes, for any instruments, anything that fluctuates, including weather, for example. Also, would that price be a 43% likelihood point? Well, it would be 80% likely that it would get here, but once it gets here, there's a 43% chance it's going to accelerate to the upside and a 43% chance it's going to accelerate to the downside. The balance is consolidating. So, good question. Thanks, Scotty. I appreciate it. Hi, Barry. Why did you allow yourself to trade within your stop if you wanted an 8-tick stop? I assume you mean why did I only use 6? I didn't need the 8. Why bother? I just wanted to be 3 ticks underneath the low, and I was able to enter 2 or 3 ticks better. It was 3 ticks better, so there was no point. Boy, you know, I didn't even think that I only did longs. And I didn't do much median line work either today, Cynthia, sorry.
Tim, if you're
yes.
going to use the slides, would you grab that laser pointer again? I think with
yes,
my
ma'am,
moving it around,
yeah, I tell you what,
took it back from you.
I'm a bad boy, I'm sorry. Deb, do you only go long or do you short sell to open a trade? Yep, I go long or short equally. I'm very, very buy. There's no way to say that. I'm equally long or short, and I sell just as often as I buy. This just happened to be the series. Here we go, Cynthia. This just happened to be the series of trades close to when we're doing the seminar. And again, you got to give it a week for compliance. So this is about as close as I can possibly show an actual trade and get it into compliance to get it approved. But so these just happen to be 3 longs. Ken, well, thank you very much, Ken. I appreciate it. Bob Barry says, do you always use a modified, Andrews? No. The reason I went to a modified, and here's the slide right here. So here's the regular median line. The reason I went, you know what, let me try a modified, was that I was trying to decide between this upper parallel and this maximum excursion line, and then I just put the two together and went, hey, this maximum excursion line is the upper parallel of a modified Schiff, so let me just use a modified Schiff. But I'll use either one, depending on, you know, what works best with the chart. In the first slide, it seemed that you used the standard pitchfork drawing tool. Do you draw your own individual trend lines in your own working charts? Yeah, sure, of course. I use trend lines, and really maximum excursion lines are similar to trend lines, like this. I use trend lines, I use median lines, I use these things, they're called advanced multi-pivot lines. I can find, you can see, for example, how this high lines up nicely with this high, and when I get this high and then it pulls down, I just immediately project it forward, and you'd be shocked how often, we're compiling the statistics right now, but you'd be shocked how often this ends up projecting significant highs. For example, take this low that then followed up to the upside instead of following down, projected forward, and it gave you the bump here. And we use it again for boxing in profits and stuff. So I draw kinds of simple lines. I like simple, easy visual lines. Let's see. It is the same rule for trading to the downside, yep. Oliver, it seems like you were taking a long during a downtrend in the first trade. Oliver, I don't want to shock you, and I'm probably the only person that's ever going to say this on an IB seminar. Trends are overrated. Because a yearly trend is not the same trade trend as the monthly trend, is not the same trade trend as the weekly trend, is not the same trend as the daily trend, is not the same trend as the 240 trend or 60-minute or 5-minute or a 1444 tick. It depends on what you're trading. Stay with what you're trading. And this particular method that we're looking at was meant for intraday trading only, and it's actually meant for picking tops and bottoms out of the air, so to speak. This is why I tell you in currencies and stocks and indices, this will not work. Do not try it, okay? Period. But it's a good question. Heiko, how are you? Let's see. Is your risk on these methods always 1.6 max of your, yeah. So Heiko's asking a really good, important question, which is how much am I willing to risk of my portfolio? In other words, the size of the stop when I position size. The maximum I ever use is 1.6% of my portfolio on any trade, period. Yes. And we do a session called Evening with the Masters twice a month where we portfolio trade We now have everybody up to 4 positions, so they have to learn how to juggle 4 positions with a maximum of 33% of margin and only 1.6% on their total risk, so their stop of each trade. And then we threw them a curve last night. They had to enter a market randomly. It's called, Amos Hofstadter used to use this all the time. He used to drive us crazy. Great way to learn. Randomly, I gave them each a stock. There were 3 different stocks, and randomly, whether they were going long or short, at the close yesterday, they had to dump one of their positions at the close, take this position on, whether they liked it or not, and they have to manage it now. So, yeah, 1.6 max of your trading capital. Hi, Peter. Yes, I was a NYMEX owner trader for over 27 years. Great. Love what you do. How can I get more dialed in? Come to marketgeometry.com. Don't spend a nickel. Come and read the free stuff first, okay? Oh, I trade your methods almost every day, hopefully correct. My percentage has greatly increased since I started using your methods. Great, Peter, I'd love to see you, okay? Drop me an email. Come on over to the website. Read the free stuff if you haven't. Look at the videos. You'll like the new website. Plus, on top of that, we've got every Monday, Wednesday, Friday, we do market maps in the middle of the day where we go over all our foundation material. If you want to get advanced, you can sit with me Monday and Friday mornings at 6 a.m. and I basically try and teach you as Dr. Andrews taught in his living room, as Amos taught. There were 4 chairs in his trading room. I was lucky enough to have one of them for about 4 years before he passed away, and as well as, my own trading methods. If you portfolio trade, we have Evening with the Masters twice a month. There's lots of ways to get involved. Come on over. Love to see you. Let's see. Hi, Gina. How are you, darling? Can clumps be sloped or are they horizontal by definition? Now Gina's asking a really advanced. Gina is one of our members at Market Geometry, and she professes to know nothing, but she's smarter than the average bear. And what she's saying is this is clumping here. And we would say that let's look at this one. It's easier. This is a range right here. But ranges also come in a sloped version. I don't see any that I like that well here. But if you could imagine, just turn this about 30% so that we have multiple highs, but they're on a sloped line, multiple lows that are on the same reflected sloped line. Clumping could certainly be sloped. Generally, I don't even bother. I just do horizontal, Cynthia or Gina, but they could certainly be sloped. Sure. Heiko, oh, no, we already did that one. All right. In the first slide, did that one already? Does the line of maximum excursion apply for daily bars? Oh, look, applies for anything, Steve. It applies to, you can chart weather, and it works really well, by the way. Andrews did a 2-year, drove the Miami Herald crazy. He challenged them to a 2-year weather forecasting contest, and after 1 year, they were begging him to let them out, and he wouldn't. Anything that fluctuates, you can chart. And so lines of maximum excursion, sure, absolutely apply for dailies, weeklies, monthlies, ticks, any instrument, anything that fluctuates. Do I trade the E-mini S&P futures intraday? From 1985 until decimalization changed the NASDAQs, I did trade a lot of currency futures all the time, and I certainly traded the bond futures once I learned this method, but my bread and butter money for myself and my sovereign wealth fund clients was the NASDAQ and the Russell. So yeah, I traded lots of intraday indices, including international ones. And you can use these methods, not corner trades, but all the other things that I've talked about today, all the things I've talked, and you can go back, there's about, and Cynthia's going to do this at the end, there's probably 15 or 20 of my past ones that you can look at, and I'm sure there's some E-minis in there. Can't see the pointer anymore. It's right there. Eric asked a fascinating question. Okay, why do corner trades not work so well for stocks? I could tell you this, Eric. I spent about 2.5, 3 years I kept seeing this pattern in the bonds, and I couldn't put my hands around them. And I finally did get it. And the reason it works so well, it has to do with the natural volatility and rhythm of bonds, this ability to get long after clumping in about, especially when the clumping is around 7 or 8 ticks, get long. Generally, you'll have a high probability of getting half off at 8 ticks and going to break even if you end up getting stopped out. That's not the same in stocks. It's not the same in currencies. It's not the same in stock futures. So because of that, it's not a high enough probability trade, nor does it have a good enough risk reward. If I was going to trade stocks, and I trade a lot of stocks, a huge position in Facebook, I need at least 3-to-1, 4-to-1, 5-to-1 risk-reward ratio, or I'm not going to bother, because the probabilities are not that high. If you have a 3 or 4 or 5-to-1 risk-reward and you're right once, you now get to trade free 3, 4, or 5 times forward. Hi, Professor, do you think this might work with 10-year or maybe 5 years? It absolutely does work with 10s and 5s, Scott. I prefer 30s because I trade a huge amount of money for, like I said, the 4 largest sovereign wealth funds, as well as my own account. And so I want the biggest tick possible. Now, you guys might want a smaller tick. My partner likes the 10s better than the 30s. He likes 15 and a quarter versus 31 and 25. So you might like the 10s better. You might even like the way it trades better. I like 30s. If you like 10s, this is absolutely fine. You may have to adjust whether or not it's 8 ticks, 6 ticks, whatever, do some sim trading, but it definitely works. That's the part you'll just have to futz around with, is whether or not you go to break even at 6 ticks or 8 ticks, but it works perfectly. Erwin, how are you? Great session, thank you. Thanks a lot. Now, a large trader pushing stops. Yep. How does this work in practice? I don't understand the mechanism. Don't they then lose money in that process? No. That's whales. I'm a whale. Those are called whales, my terminology. It's becoming popular now all of a sudden. But I may be buying to sell. So if I start buying, if I see this area here and know that there's likely to be stops above here, plus people that are going to break out buy to get long at new highs, I'll start buying in here to push the stops, okay? And when it gets to this area, there's so much that goes through in the bond market. I'll start buying right as we get close to the stop loss areas. There'll be so many stops that it'll actually take me from being long to short, and if I need to, I can start selling as it comes down, and I'll have a great average and be pushing this market down as it heads here. Do you do it all the time? No. Do I do it when I need to? Yes. Sometimes that's the only way I can get my profit orders filled, is to manipulate the market a few times. Bi-directional. Thank you, KB. I guess I just couldn't get the word out. Hi, Peter. No, we were talking. Hi, Ed. I was listening to a past webinar, and you stated Dr. Andrews used stop and reverse. Yes. Similar to point and figure always in the market? Well, similar in that you're always in the market. So what Andrews would say was, for example, in this median line, let's assume this is a traditional median line. He would put out, he would be buying down here, and his stop would be X points down here, but he wouldn't get out of the market. He'd stop and reverse to short. If we had come out once and then come inside, he'd put a sliding parallel, and he wouldn't sell here, or should he buy here? He'd wait till we got to the sliding parallel. We got one tick past the sliding parallel, he'd stop and reverse and go long. Otherwise, he'd be short in here all the way to the sliding parallel, then stop and reverse, and then he would have warning lines, which are equidistant from the median line to the outer parallel. He'd run 4 out here, and he'd be looking for frequency as we moved out here. And yeah, he'd always be in the market. David asked me Arthur, I'm sorry. Don't understand the question. Restate it. I'll be glad to answer it. Do I use well, that was interesting. Do I use Fibonacci numbers? You know, one of my closest friends is Joe DiNapoli. I know Fibonacci numbers inside and out. I certainly am aware of where they come in, and somebody just asked me about running stops. The 382 areas are some of my favorite areas to just run the Fibonacci traders crazy back and forth. I'm walking on eggshells here. Cynthia, I have a question for you.
Okay.
Can they see the chat?
Not all the chat.
If it's directly from someone?
Only when it says all participants.
Okay. All right. So then I'm going to assume that they can't say it. This is too sensitive. I don't want to say it. Somebody asked me about a question about the vice chairman of Chicago Mercantile Exchange, and I'm not going to comment about his trading style. He's one of my closest friends. I just think his trading style is his trading style. I would say this, just to you privately, he does use the type of trading method that you're speaking about. However, I will tell you this, he will not take your phone call. He's too busy. He's about to retire, as a matter of fact, move to South Beach in Miami. He has 100-acre frontage in South Beach. He's going to retire and just relax and have he's 68 at this point. Anyway, he does use the method that you're talking about. He's not going to help you learn how to use it. There are a couple of good books out there, and he also does. By the way, not only has he taken my seminars, I've known him. I've been very close friends since 1980. Not only has he taken my seminars, but when I had and he still has on his desk, he's got 2 monitors, and they both run that method. One runs that method. The other one runs traditional bar charts, and they all run median lines on them, including the one that doesn't run regular bars. So you can combine that method with median lines. It works wonderfully. Ed says, Tim, you've stated in the past 10% trading with the edge, trading with the trend. That is true. Wouldn't that be for the time frame you're trading on, and how would you define trend? Well, in this particular method, I'm actually looking to pick a high or a low. And this is why I tell you, don't try and apply this to stocks, currencies, indices, anything else. This works particularly well in bonds. If you take a look at bonds, bonds tend to move up, then down, then up, then down, up, then down, over and over, back and forth. It's how I developed mountains for the 5th graders, because you can see it all the time. And then we found, well, you know what? Stocks do that as well. So if you can look for a stock that has a mountain and has a stop, that works pretty well as well. So would that be for the time? That 10% is for any time frame you're trading. And how would I define trend? I would define the downtrend as lower highs and lower lows. I would define an uptrend as higher highs and higher lows. I do think trend is, especially these days, has now become oversaturated in the sense that people are frozen. They couldn't possibly take a trade because they can't trade unless it's with the trend, and they're using multiple time frame analysis. It's one of the worst things. The gentleman that introduced that to the market, it's one of the worst things that could have been brought into technical analysis, because there are now so many traders that are so confused that end up blowing their accounts because they don't have they don't have the faintest idea. They don't become intimate with not only the instrument they're trading, but the time frame they're trading. Trade one time frame, and only that one time frame, and pay attention to the quote-unquote trend in that time frame and only that time frame. But good question, Ed. Thank you. Hi, Erwin. Let's see. We did pushing stops. Bob, now where did you hear that? Bob says to me, Well, I'll say that line. What does it mean that you cornered the gold market twice? I literally turned the gold market. I have so much money under management because of the 4 sovereign wealth funds that I manage that their money plus my money leveraged was enough to turn the gold market and push it through 1,500 all the way down to the low 1,300s. Then as it came back up toward 1,500, I was able to stop it again at 1,480 and turn it down and take all of my profits between 1210 and 1185. That's what it means. That's what cornering a market means these days. Oh, my brother, how are you? Here's one of my friends from the Coral Gables group. I think there's only 6 of us left now that were from Dr. Andrews' Inner Circle, and you guys are nice enough to come. I appreciate it. It's always good. I will give Sean and Lucy love for you. Thank you very much. Very, very soon I will be down there seeing you. Good. Send me your address. I'd love to talk to you. Let's see. Kushal. For first entry in bonds, your order is prior swing low. I was buying below the lowest low. Yep. Ideally, when we market is heading up, we expect to take support at the low, and break of low is also a change in behavior. That's true. I'm with you. Can you tell in short how you would have entered the trade if it was early market hours, not 11 a.m., slide number 25. Ah, okay. One second. I think I already blew it. One second. Oh, there we go. Okay, so if this was about 8 o'clock, you can see we're at 134.05. We've got a major low at 03, and I could have an 8-tick stop and my stop would be above this low and this lowest low. So I buy the retest here. I know it's horizontal, it's not sloped, but all this clumping is going on. I'm going to buy this second test and retest right in this area. My stop's going to be underneath this low and this low. I'm going to take 8 ticks, profits at 8 ticks, and go to break even, and let the rest run to some logical high, which in this case would probably be this first pullback. And what ended up making 24 ticks on half, 8 ticks on the other half, never taking any heat. But again, you have to trade this with iron discipline. For everyone that works out and looks perfect like this at 11 o'clock, as price gets past 10 o'clock, the probabilities decay tremendously. But if this was 7 o'clock or 8:30, I'd take this in a heartbeat. So good question. If you extend the median line backwards, it hits the secondary highs near 7 a.m. Nice catch. Thank you. And we would actually call that a reverse median line. Very good. Hi, Tomas. How are you? Can you help me, please, on this? Do I need confirmed swings to draw sets? I don't need confirmed swings, I just need change of behavior swing, which is by taking the previous first swing in opposite direction to the trend without new low high. Applied to what, Tomas? But in general, you notice, for example, when I draw maximum excursions, I'm drawing on the second high. So if that's what you mean by confirmed, then to draw, then I would say yes, I don't draw off the first high, I draw off the second high. So in median lines, you're actually drawing, let's go real quick. There we go. In median lines, you're just drawing off of major highs and major lows, no confirmation needed. Even if you draw a median line, for example, here, let's make one up. Let's draw from this low. Well, I guess I'll do it. It's going to look awful, but forgive me. We go there. We connect here. We bisect the center. And we make a median line like this. And I wish I could be parallel, but I probably am not incapable of it. Okay, so that's my funky looking median line. Okay, even though this median line gets broken. It gives us tremendous information. What information does it give us? Well, it has the same probability. You can draw any of these alternating pivots. It has the same probability. So when price does not make it to the median line here and then starts to head lower, we call that Hagopian, and we know it'll move at least this far in the opposite direction, if not farther. It's a significant sign of weakness. You can see the price came through, but then came back up and retested. If you have a stop, that's a great place for a short entry. So even a median line that you draw that is useless in the sense that it didn't grab the bottom, if you know how to use it, every median line gives you information. Hopefully that helps you, Tomas. All right, so that answers, thanks, Scott, I appreciate it. How is optimum tick size determined? Paul, I got to 352 literally because a friend named Raymond said to me, and I wasn't using tick charts at the time, did you know that if you take 15 minutes, if you take a number of ticks in a day and find out how many ticks there are on average per minute and multiply them by 15, that means that the average tick size is 352. That's how I started out with 352 ticks, because prior to that, I had been using 15 minutes. And I tried it, and I thought, you know what, he's right. Tick charts do look cleaner to me. Why did I use 777? I looked at 352, it was too noisy. So I just about doubled it. I just went, hey, you know what, let's double 700. 777 sounds good. 1444, how did I get to that? Twice of that, twice the size of that. But what I want to look is, I want it to let's get to a median line, or let's get to something there. I want it to flow nice and look pretty. I don't want it to be clunky looking. If we go back to here, okay, these look like 10 tick bars. I mean, if this was your entire, all day long you were watching this, you're missing the natural swings of the market, okay? So you want something that flows nicely on your screen like this. So that's how we get it. There's no magic to 777 or 1444. In gold, I like 1888 or maybe 1444. Anything that flows nicely, that's all. Oh, Bob, here's a tough one. What would you have done if you had not met Dr. Andrews and Amos Hofstetter? I was already trading. I had already been charting for 3 years. I charted in exchange for work. I could work out in the steel yard on Saturdays with a friend of the family's, with my brothers, or I could do his hand charting for him. And even at 9 years old, I was smart enough to know that it's often rainy and cold in Chicago, and it's a lot smarter to be inside drawing on a chart than it is working, with gloves out in the cold. So I've been charting for a long time. Then I started to trade my brother's account. He gave me a $2,000 stop loss. And I was successful, but, I became much more successful once I learned just the beginning. I spent 5 days outside of Amos's house just trying to get to talk to him. And he finally, was polite enough to even hear me out. And that bought me the chance to just, look, I'll sharpen pencils. I'll do whatever you need done around the office. I won't even bother you. I'm just hoping that you'll drop a golden nugget, and I'll just listen. I mean, that's how it all started. Dr. Andrews was a little easier. The gentleman that started me out in charting, plus my brother, both knew him, and Amos knew him, and so gave me an introduction to Dr. Andrews. And as I said, my brother lived down the street, so that's how I began there. But if I hadn't met the two of them, it's hard to project what would have happened if life had gone differently. I was likely on my way anyway to the University of Chicago to get 3 PhDs. I might be a physicist right now. God help me if I'd become an economist. but I do have a PhD in economics. I might have been a mathematician. I love both of them. I still teach both of them at some great universities. But I don't know. I don't know if I'd be the trader that I'm in today. It's hard, you know, when I teach, you have to remember how much of it is talent and how much of it is things that can be taught. So it's a good question, Bob. I don't know the answer. Can I detect a large trader in the market? They must leave some footprints that we can see. Right. Hi, everyone. We teach them at Market Geometry. We call them whale tracks. We teach you how to read them. I don't know if there may be an article if you go look in the free info. If not, that's a good one either for an article or maybe something coming up. Ed asked me. No, he's not a breakout trader. Let's see. Did that one. Yeah, Willie, any opinion on the book Flash Boys and Is the Market Rigged? I knew that gentleman, and he was about 1% of what the movie purports him to be. It's a good movie. You know, for weekends, even, you know, my son and I went on a Saturday afternoon and watched it. That's fine. I mean, he was not a shaker and baker by any means. And you know, the recent scandal, Bernie Madoff. You're talking about, you know, $35 billion versus, you know, I don't even think it was much more than $100 million back then. And Bernie Madoff took in actually some friends of mine that I warned them about him. I can't tell you how many people he took in. So, is the market rigged? Well, there we're talking about it's called pumping and dumping stock. That's penny stocks. That's slightly different. But is the market rigged? I would say that large traders, especially large traders that have been around a long time, like myself and a few others, do have an advantage, although we are disappearing because of our age, because we have the ability to do things. We've been given the ability to do things with particular regulations and exemptions that other traders can't do. For example, I don't have to report my trades. My volume does not have to go into the daily volume if I don't want to. I can report it or not report it, which means I can actually manipulate the volume reports. How fair is that? Similarly, I can trade on some exchanges, trade some of the things that you trade, but trade them on exchanges that aren't the normal exchanges. That's when people talk about dark trading or dark exchanges. So is that manipulated? Not sure. I can also trade inside the cash markets, which you guys can't get to, and then back to this. So does that rig the market? Similar thing. I made a trade in Facebook, and literally before I could and had to report the trade to the SEC, I got a call from their financial advisor asking me if I would like to cut a deal because they were no longer the majority stockholders. And of course, I'm always willing to do something at the right price. So do large traders have an ability to do certain things that smaller traders don't? Absolutely. I can also run stops. But that being said, you have an edge that none of us have, which is you can trade when you want to. You can choose not to trade. Now, I have a super relationship with my sovereign wealth funds. They don't care if I trade. I make so much money for them. More importantly, I've been consistently profitable. So they know that if I'm not well, I just don't trade. I'm smart enough to know it's not time to trade. If I need a vacation, I take my vacation. They don't even bother me. I don't get a phone call unless it's a, hey, how's things going? It's never a what's going on. So your edge is, if you're smart, I'm not 100% today. Remember, you're going to be trading against people like me. So don't trade unless you're 100%. okay? Choose the things you trade carefully. Don't impulse trade. Don't over-leverage. All those things are extremely important. If you're trading for a hedge fund, you have to leverage up. You have to make money, and lots of it, or they're going to fire you and find somebody else. So you do have an edge on them. So is it rigged? Yes. Is it rigged against them? In some ways, yes. Let's see. What was that about multi-charts and IB? IB has now struck a deal with multi-charts. You can get a free version, which does most everything, and you can do a paid version, which does a few other things, including allow you to execute on IB's platform directly from multi-charts, which means that you can now, you know, in the past I've always been squeamish. In fact, I started out this morning being squeamish about showing tick charts because I thought, you know, I know in the past IB's tick charts were, you know, not very good. Multi-charts are good. So now I don't feel bad at all, and I'll have to take Cynthia up on it and do some presentations in multi-charts. It's a very fine platform.
Tim, can I jump in here for just
a moment? Darling.
Because David was out. David actually went out and checked, and it says that the tick charts are coming soon to Trader Workstation. Where multi-tick charts does have the tick charts, they're not yet available in TWS. So watch the release notes. That should be something that's coming up very soon.
Yeah, it's, you know, I know multi-charts does well with tick charts because I have a copy on my desk. So as soon as they sync them up with you, and I'm sure it will take them no time at all, I'll make a phone call today and see what's going on. But as soon as they sync them up, multi-charts is fine for tick charts. So.
And thanks to David for that information, for doing the checking.
Nice.
And now while I have jumped in, could I actually grab the ball back for just a minute, Tim? Because before
it's my favorite part.
Before we end today's session, I'd like to take everyone out to our website so that you can actually see how to access not only today's information, but as well any of Tim's previous webinars. So I'm going to share my desktop, everyone, and you're going to see that your screen blanks momentarily. And then you should see I've brought you to the website. I'm actually on the education menu, and I've already brought that up. But notice in the lower right, there's recorded webinars. Now, our recorded webinars, we do have quite a few, and you'll see that they're organized by different topic tabs here. But if you go into the Industry Sponsored tab, you'll find that we've got a host of webinars there available. But what I'm going to do is take you in and filter by all speakers. So we'll simply go down and find Tim Mor here, and you'll notice that all of his previous events going back, I'm only back to 2012, Tim. We've got quite a few. And each of these are hyperlinks to the recorded playback, and you'll also find listed with them as well are all of Tim's notes. So I did want to point that out, that it is available. Now, I also have my trading application, or TWS, open. So there were a couple of ways that I wanted to show you. For those that are still using or have been IB clients, there's the Advanced Order Spreadsheet, or our classic TWS. Simply go to the analytical tools and notice here, multi-charts is available. Now, also, I'm going to take you into the Mosaic interface, and for those that are using Mosaic, notice that under the New Window button, you can, let me see, I found it, here it is. Under Technical Analytics, you'll find access to multi-charts as well. So check that out for those IB clients who'd like to learn more about multi-charts. Well, let's stop my sharing. I'm going to get back in so that
was nice.
Looks like there's a few additional, and by the way, we've also passed along to Tim a direct link to that section. So whether you go to Market Geometry or Interactive Brokers, you should be able to access any of those previous recordings.
Yep, we have those prominently featured, and every once in a while we get out of sync with the links, but if it doesn't work in one day, believe by the next day it gets fixed. So our web guys are on it, and Cynthia's people work with them to make sure that we always keep the links going anytime there's a change. So, all right. So Eric says it privately, but I'm just going to say it publicly. So using 3D cube or multi-dimensional for stocks could be a problem. No, absolutely not. Using 3D cubes, and if you go back, I don't know, 3 or 4 seminars ago, you'll see me using a 3D cube to find the floor in 3 dimensions, even though we're charting in 2, and then use that for a stop. You can certainly do that for stocks. If you're capable of seeing it and drawing it, it's or multiple dimensions for example, maximum excursion lines. All those work beautifully for stocks. But the corner trades don't work for stocks. Okay, so 3D cubes, multiple dimension, definitely use them in stocks. Corner trades, don't ever bother. Okay, but great question, Eric. Thank you. And I'm probably the only one crazy enough to try and chart in 3 and 4 dimensions on 2-dimension charts, but it's the physicist in me. Books. You know what? I'm looking at my library behind me. Let's see. Just Google point and figure charting is the first one that I see. I probably got about 10 here. You could drop me a line. I can't see that well. Drop me a line. The bat cave's too large. I can't see that far across the bat cave. Let's see. Is there a book resource you would recommend for using Andrew's methods with stocks? The only book on Andrew's method that I would recommend, and I'm not even that wild about my own book, is Trading with Median Lines, which is my book. There's one other book out there. It is, I'll just say it's junk. Doesn't know anything about median lines. He adds RSI and all kinds of weird things to it, MACD and all this weird baloney. It's just junk. It's somebody that wrote a book to write a book. So the best thing you can do, so I'll tell you what, don't buy a book, including mine. Read the 100 articles free at marketgeometry.com. Look at free info or free, it's either called free info or free resources. You'll see free articles. There's 100 articles that are free, which is much more than a book's worth. Read those. You'll know more about median lines than if you read anybody else's median line book anywhere. If you want to learn more, join the market map session midday at Market Geometry. It's not that expensive. It's the price of a stop every month. And otherwise, read the free articles before you do anything, though. There have been several days, daily chart, of, do you see this area as a mountain chart? BB, I'm kind of missing part of the question. So restate it and I'll take a shot at it. Seems like line of maximum excursion is the key with stocks to keep things simple. Well, it's certainly a great chart, a great line. How about that? I have no problem with trying it. Try and see it, practice with it first. It works for me. It's a great piece of visual work, but try it and see what works for you. How can I detect a large trade in the market? Oh, we already talked about that. BB says, do you see the ZB is forming a top here? You will not get, I was popular, I had my 15 minutes of fame in 2008. The Thursday before the stock market crash, I was asked live on MSNBC, show a chart. Hey, you know what? Where do you think the Dow is going? And we were looking at the Dow chart. It was at 13,520, and I said, 7,500. The guy stopped. It was a friend of mine, Tim, and he stopped and he said, no, I mean the Dow. I said, yeah, 7,500, maybe even 6,000. And we put a chart up, and I showed him why. And because of that, a lot of people were like, oh, would you like to come on and talk about this? Would you like, you know what? I don't want to be a prognosticator. I don't want to do that. I'm not interested in that. That's not how I trade anyway. So I don't see anything forming anywhere. If I see weaknesses, let me quote, if you go to last month's seminar on IB, I actually brought out some quotes that I had written down from Amos. Let me quote Amos. Don't try and sell the top. Wait for a reaction, and if it's not a strong reaction, meaning it doesn't take out the high, then sell a reaction high. So I don't really see anything right now. I'll watch and see how it unfolds, but I wouldn't predict it even if I thought something was going on. How well would the median line approach be used working with the directions of volatility ETNs like VIX and VVXX? Works perfectly, Vance, and I actually do chart those. Vance, I even chart my P&L. How about that? And I make suggestions about asset allocation. For example, I might tell my investors, you might want to take some of my money and invest it with another one of your clients or a different client, open an account with a different client because of X. No, they've never taken me up on it, but I actually use median lines on my P&L. All right. Hi, George. All right. So George says 7 a.m. to 9 a.m. Do you mean Eastern or PST? I actually don't mean either one. I mean Central Standard Time, which is where the Chicago Board of Trade is. Chicago time. I'm not even in PST. I'm actually at Arizona Mountain Time, which is a weird, we never change times, but Central Standard Time. Can I do a presentation just on stocks? I think Cynthia's answer to that was if somebody, see, this is, I'm here at the grace of IB and especially the Chicago Mercantile Exchange. I've been a member of the Mercantile Exchange since 1980. I do all kinds of things with them, anything they ask me to do because, of course, that's where I blossomed as a trader. And, you know, so I will always be a Chicago Mercantile Exchange member. My kids both have coats and badges and have been on the floor numerous times. I need to be sponsored by industry organization, I guess is the right way to say it. Nobody stepped up and asked me to do a stock presentation. So I guess the answer is no. We do them at Market Geometry, but I don't think it's available here unless somebody steps up.
Answer here, Tim, is not yet. Instead of no, let's put it not yet.
I'll just leave it alone then. How about that? I'll keep practicing and I'll leave that alone. Did the 3 highs and the lower 4th high in gold rely on the concept of 3 drives to the top for you shorting gold? Oh, you know what, Bob? Go back and look at last year's gold presentation. And if you have, do more chart work because it's pretty. I thought I was a presenter. It's pretty explanatory. And then on top of that, investors and traders had really drawn a line in the sand at 1550. So somebody had asked earlier about whales manipulating a market. It just seemed obvious to me that if I was able to get a large enough position with a good risk reward and a quality stop and push it through 1500, I would run so many stops that I would be in profit world before I knew it, or I'd be stopped out. But I was willing to put that stop on the table. So take a look at it. Talana says, I've had a few failures and I was wondering why. Okay. Hagopian is a clue, yes, but don't overuse it. And go back and look at the articles, certainly articles on that at Market Geometry. How can I detect a large trader? And we did that one. I got to read first. Oh, all right. Steve says, do you work with any research in computer algos? The best computer programmer relative to the markets that I know is an independent guy by the name of Mark Brown. He's a crusty, cranky old guy like me. Mark and I have been around each other since the 80s. Started out trading with TradeStation. And boy, when I needed something programmed in TradeStation, and to this day, Mark will help you program in TradeStation. But he's also one of the biggest And most people that do algo trading or do system trading, they're taking advantage of a market imbalance that soon irons itself out, and then their system doesn't work anymore, or their algo doesn't work anymore. That's not what Mark does. And Mark is so good that he actually puts up his charts live. You can watch his system do arbitrage live on tens of millions of dollars all day long. You can sit there and watch your screens as both sides execute in Europe and the United States, back and forth, back and forth, back and forth, live, and he's not even involved. Absolutely wonderful. So, do I do any research? Sure, I've done lots of research. I used to have a partner. He was one of the people that invented Unix that did nothing but investigate my ideas as if they were a system. He's now gone back to work for HP. But I say this humbly, I can out-trade any computer algo and any computer trading method in the world with my little finger. Okay, computers are smart, but they ain't that smart. Sorry. What's your opinion on Fibonacci retracements? I don't think I've ever seen you use them. If you look at my charts from the early 2000s, you've seen them on there. Are they irrelevant? Well, it's important to know where they are because there's a lot of Fibonacci traders. Then you can decide whether or not you want to use them in terms of support or resistance, or whether or not you want to run the stops. But yeah, I think there's enough people playing them, you should know where they are. Do I employ Jim says, do I employ a specific method for currencies, or are your trades based on median line principles and structure? That is Mountain Valley. Yep, everything I use except for this bond trade, and that's just the corners, but I'm pointing at the screen, I'm sorry. The maximum excursion lines, boxing in, looking for stops that are underneath structure, all of these things plus median lines, I use in everything that I trade. And I trade everything from Mexican debt, stocks, currencies, cash foreign exchange, futures on currencies. I trade every commodity known to man, even things like rough rice, all kinds of weird stuff. And I use the same methodology. Mountain and Valley, that's the easiest method I teach. I teach it to fifth graders. Michael Dell and I are trying to partner so that we can reach more fifth graders and ninth and 10th graders next year in more schools. We're in 59 schools right now. He's a good friend, and I manage a lot of his money. We're we'll be sitting down in June, trying to find out if we can get it in more schools. And then, of course, there'll be some Dell branding. But it depends on whether or not I can stomach the Dell branding. Not that I'm against Dell. It's just at some point I don't want to be very commercial. But it would be nice to reach more kids in schools and that's a give back. I don't get paid for that. It's just, I'd like to help people. But that's where we teach Mountain and Valley the most. So, yeah, but I use those methods on everything. So let's see. What's a sovereign wealth fund? Well, for example, Norway is one of the largest. Canada has a sovereign wealth fund. Norway, a lot of countries have them. Also, the Queen of England, the Sultan of Brunei, the Kuwaitis have something called Future Fund for Generation, which is money that they put away for the future of young Kuwaitis. The Saudi princes each have their own sovereign wealth. So these are basically large pools of money that are non-U.S. And in general, the rules that you can use of where the money's housed and how it's traded is pretty flexible. And it's also, frankly, a gagging amount of money. They will give you as much money as you can physically handle because they have more money than there is for people to manage it. And the good news is I can manage a lot of money. So I've been managing sovereign wealth money at least 15 years before the word was invented. I was managing Saudi money in 1985. So, but that's what it is. Let's see. So what would you say would be the minimum capital you would ever recommend someone to be in the stock market? No. I would assume it's up and above the minimum $25K required. I don't think there's a minimum capital of $25,000 to trade stocks. Cynthia, can you tell? I don't think that's the truth, is it?
What it is, it's the way accounts are margined, and less than 25,000, you are restricted to the number of day trades that you can do within a 5-day period. So
but I could trade 10 shares, right?
Oh, yes, you can.
Yeah. So let's say you had $5,000. Okay, Steve. There's nothing wrong with you trading, and think of it as going to the university, okay? What you want to do is you want to learn, and it takes a period of time to learn. You can't learn in 6 weeks. You can't learn it all in 6 months. You can't learn it all in 18 months. You get better and better and better as time goes on. You do not want to run out of capital before you learn, okay? So you might start out by trading 5 shares. Depends on what you trade. If you're trading Google, maybe you're trading 1 share, or Apple. But if you're trading something that's $20 or $30 a share, maybe you just trade 5 shares. And who cares what the brokerage is? What you care about is that you learn how to execute, then you learn how to draw, you learn how to understand the movements in the market, you learn how to put in stops and a methodology that works for you. Then you can start worrying about how much money you need, et cetera. So if I were you, I'd open a very small account. I would try and trade not frequently. In other words, not multiple times in a day. I take my time planning my trade, executing it, and I pay ultimate attention to executing the one trade all the way out until it was finished. So, if you're going to trade the stock market, I don't think you need much money. There you go. Charles says, if you want to look at the 3D cube, it was in the May 2013 seminar at IB. Thank you, Charles. I appreciate it. That was one of my, I really enjoyed that one. That was nice. Do you personally do the presentations from your site? Well, we do presentations all the time, 3 days a week. At midday, that's called Market Maps. We also do breakfast with the masters, which is myself, and then I try and add Amos's insights and Dr. Andrews' insights for breakfast. And then there's also eating with the masters, and that's twice a month. Those are all from the site. But we also, if you go to the website, click on free resources, you'll see all the IB webinars, plus some older IB webinars that Cynthia no longer has up. I don't know what happened, but that's okay. We have them. And then also, some prior to that, some Chicago Board of Trade and CME webinars. So we have all kinds of stuff. And there's also an MIT lecture in there, thrown in there just for chuckles. I opened up the Sloan School of Business trading building. They have a building now that's just for trading. And I was the first hedge fund guy that would stand up and actually do something. No, I guess nobody wanted to talk. I noticed ZB clumping for several days. Sorry about the question. Oh, okay. That's fine. Eric says, I thank you for doing what you do. It really makes a difference, especially for the kids. You know what? I have such a nice living. My kids, my family lives wonderfully. I can now live in the mountains of Arizona, live like I want. I have the luxury to, be around people like Cynthia and Barbara and Pete. And that's all because of this industry. And, my father always taught me, for everything you give, you get 1,000-fold back. It's my job in this world now that I have made my mark to give back. So I appreciate it. How do we reach Mark Brown? Google him. You'll find him. Just Google him. Google Mark Brown and TradeStation, or even better, Mark Brown Omega List. OMEGALIST, Mark Brown Omega List. If you email him a serious question, he will email you back. If it's not serious, you might get a very crusty, cranky answer back.
Tim?
Yes.
If you would take just take a look at the questions and one more question so that we can wrap this up. I know there are a lot of people who are waiting for the recording, and the only way to get it is to actually end the event.
Okay, let's do Matthew's last. What are some good ways to practice trading in general? Doing playbacks at 20 times, bar by bar, making swings. marking swings, all of these, is one more effective than the other? If I had to pick one, it would be I would randomly move a chart back. For example, on Ensign, let's just pick Ensign. I have to go back and review multi-charts. I'm sure it does the same thing. But move a chart randomly back to months back, so you don't know what's going on, and then take a look at what's in front of you, mark the chart up, and then advance it 1 bar by 1 bar by 1 bar by 1 bar as you draw, okay? And then when you get good at that, then go to replay at something like 20 times the speed and do the same thing, okay? Marking swings is always a good start, but those actually work really wonderful. And I think those are great questions. So if I missed your questions, you can always drop me an email, timothymorge@gmail.com or timothymorge@marketgeometry.com, and I'll be glad to answer them. And I know Cynthia would love to get some lunch.
Well, I also want to remind everyone that Tim is back with us usually on the second Thursday of each month. And after today, we'll be discussing our June 12th event.
Oh.
So please check that education menu, because as soon as we've locked in Tim for next month, we'll have him listed out there. So do want to thank Tim Mor. Tim, you have been terrific, and as always, so patient and answering everyone's question. Now, if you do have additional questions, join us next month, and we'll do this again. So, Tim, thank you very much. And I also want to express a great deal of thanks to the CME Group, because it's their dedication to training traders that makes these events possible. So, everyone, and I want to thank you for the time that you've spent with us this afternoon. I know it's been long, but definitely well worth it. Well, Tim, until next week when I talk to you, or next month when you'll be back for all of us, I want to thank everyone here today. By the way,
thank you so much, Cynthia. I appreciate your time. Appreciate everybody's time. I will definitely see you second Thursday next month.
Okay, excellent. And everyone, as you exit today's event, which you can do by simply closing this window out, be on the lookout, because the slides Tim has been using today will pop up as you exit the event. Whether you're exiting the live event or the recorded playback, those notes are available. If you happen to miss them, don't worry. They'll also be listed on the Interactive Broker site underneath the education menu and those industry-sponsored events. So thanks, everyone. Once again, have a great day all, and remember, please trade smart. Thanks, everybody.
Take care.